Nick Sly, Assistant Vice President, Economist, and Denver Branch Executive at the Federal Reserve Bank of Kansas City. Welcome on the Business Brief.
Ryan, thanks for having me. Glad to be here.
We're happy to have you, and welcome, Nick, to the Denver area. How is the Federal Reserve supporting the local economy and especially small businesses across the Rocky Mountain region?
Thanks, Ryan. I think over the last year, we've seen a number of policies, a number of programs that have been rolled out. But I think one of the first things that I like to talk about is the local connection that the Denver branch has, that effort for the regional bank, the Federal Reserve Bank of Kansas City, to connect locally, connect directly with business leaders, with community leaders. And really, it's been important to hear what the challenges have been over the last year, the challenges that arose from the pandemic, to hear directly from those business leaders and community leaders, and make sure that those perspectives are really part of that national economic dialogue. And so I think one of the first things that we've really done is been able to listen and connect directly and often with folks in the community to hear about those challenges and make sure that we understand them. Now, of course, at a national level, we've had a number of policies that have been rolled out, and certainly a number of programs, almost a veritable alphabet soup of them. Most notably, I think we talk about reductions in interest rates. These are things that support small businesses. They also support households by lowering the cost of the debts, lowering the cost of borrowing to really help to provide that bridge through what is an economic challenge. There's been a number of actions, either through working with banks, through regulatory environment or regulations, or generally other policies to help to make sure that money's freely flowing throughout the economy. And the challenge there being that we already have real economic challenges. We have real public health challenges. Really, a lot of those actions are designed to make sure there's not also financial challenges that are added on top of them. So those are some of those national economic policies that are out there. But there are two things that I do want to highlight here locally. And the first is a program called Investment Connections, which is colleagues here at the Denver branch and really throughout the Federal Reserve Bank Kansas City's district to work with small businesses and often micro businesses, small enterprises that don't always have access to traditional funding, to traditional lending through banks, and really to work to make sure that they have access to loans that help bridge them across this divide. And so I think that Investment Connections has really been an important part of the community development. And now you asked the question about small business support. But one of the things I also want to highlight is a program that's really intended to provide some support for workforce development. And that is the Laptop Challenge. And really, that's just a partnership between the Denver branch of the Federal Reserve Bank of Kansas City and businesses here in the area to take old machines, decommission machines, scrub the memory from them, and really make sure that that hardware is available to a broad part of the community and help bridge what is that digital divide. One of the things we've noticed is that access to training, we noticed that access to remote work or those occupations that is really important right now, requires that you have broadband access, but also requires that you have some hardware. And I think this partnership with the local community has been really valuable in helping to provide those resources to the community, small businesses included.
Fascinating, Nick. And I love to hear the partnership aspect of what you're doing and your focus, because I happen to believe that partnership between Federal Reserve, the business community, the community at large is so critical to moving our economy forward. That is exciting to hear. Now, Nick, a research article you contributed to in the publication Rocky Mountain Economist took up the question of, during the pandemic, how essential work and areas with a higher concentration of essential facilities have impacted employment outcomes and local consumption in Colorado and across the Rocky Mountain region. What are the key lessons learned?
Yeah, I think one of the things that we've talked about over the last several months, really last year, is how closely tied the prospects for recovery are, or the outlook for economy, how closely tied it is to those ebbs and flows in the waves of COVID-19. But another part of that has been not just the pandemic itself, but the social distancing measures and the policies that we put in place to help stem the contagion, the spread of the virus. And those things have limited the capacity for some businesses to operate or really change their ability to function in their traditional ways. And so we wanted to ask, really, how is that affecting the Colorado economy or even the national economies broadly? Well, I think the first real insight that we realized is just how different the same policy really impacts different parts of Colorado. There are some counties where only 20 to 25% of the overall workforce in that county is employed in an industry that you might think of as being deemed critical or essential. Whereas you think of like some of the Front Range counties here, a little bit less than half. Other parts of Colorado, there are counties where 75, 80% of the county's employment is in industries that were deemed critical. And so that same policy really having different effects. I think a second takeaway for me has just been how different the role of those policies has been as you've had complementary economic policies rolled out. When you look prior to PPP or before CARES Act or before economic stimulus, you really saw that counties that didn't have a lot of essential employment really had big declines in overall spending. But you fast forward to a time when PPP was available, looking now in a second round of economic stimulus coming out, really those economic policies buffered some of those differences, some of the challenges that came from the restrictions on non-essential activities. And so for me, my real takeaway is that we have to think about it differently now than we might in absence of those policies. And a way to think about it now is really the effects are much more concentrated in a key sector, what we call leisure and hospitality employment. Thinking about restaurants, hotels, resorts, and things. What was previously a much broader economic headwind has become a much more concentrated one, and looking at just one or two particular key sectors as the most prominent disaffected ones.
So let's segue into that. In the most recent jobs report in Colorado and across the country, employment declined in December in the leisure and hospitality sector. What do you see as the reason for the slowing recovery for employment for those workers and the prospects for employment to begin to pick back up again?
That's right. It's something we wanted to look, particularly in November and December was the first time when we saw the labor market recovery really start to slow. And in fact, we started to see some jobs that had been regained were again shed. And that was most prominently in that leisure and hospitality sector. And I think one of the most prominent reasons for that was the uptick, that third wave of COVID-19 that we saw in the winter months, the change in the weather that actually affected the ability of, in particular, restaurants to serve patrons outside or even in a space that they had made available. But also we had some changes in the capacity restrictions around restaurants. And I think that affected the ability of restaurants and hotels and others to keep their workforce retained. Now, I think it's right to start asking the question about what are the prospects for recovery. I think there's a couple things that I'm particularly trying to focus on. So first, the movement in employment, the change in employment for restaurant workers has been pretty quick and pretty sudden, both on its recovery, but also in the latest wave of COVID-19, you saw that the decline in employment was pretty swift there. That actually gives me a little bit of optimism that workers can actually come back relatively quickly once consumers have the confidence about being out and about in the community, once the vaccine starts to take more of effect and give folks the confidence to be able to be in shared spaces. So I think that employment can come back relatively quickly. But there's another part of leisure and hospitality that I'm focused on, which is the part that supports business travel. These big events and conferences and industry programs where people convene. That's a big part of the industry as well. And that's a part that I think could be a little bit slower to recovery because very simply, there's just some events, big conferences that take a lot of time to plan. And if those things are still on hold, we have to think about the several months to plan ahead before you start to see the workers actually come back to service those. So I think challenges a couple of different ways. But I will just say that I think the diversified type, the various types of leisure and hospitality employment that we have here in Colorado really puts us in a little bit stronger position than other parts of the country because we have resorts, we also have consumer traffic, we have some metro and business travel, and that mix I think is going to help us to recover a little bit faster than perhaps we might see in some other parts of the country.
Yeah, I travel pretty frequently, normally, in a normal year, and that just hasn't been the case. And frankly, don't quite know when I'll start traveling as frequently as before, but do expect it to pick up from my perspective. So I can only imagine others across Colorado and the country. Before I get you out of here, Nick, one last thing. In a recent speech, the president of the Federal Reserve Bank of Kansas City, Esther George, points out the disproportionate decline in labor force participation by women, much of which is attributed to disruptions with childcare. What's been the impact locally, and how do we address it?
No, I think this is an important thing for us to monitor because one way to think about the health of labor market is just to look at the overall level of unemployment, but that doesn't necessarily capture the ability of folks to actually look for jobs, to go to work. And when they stop looking, they often are not part of that unemployment rate. So we look as another key indicator, this long phrase called the labor force participation rate. And it really just means the ability and the willingness of folks to engage in the labor force to look for work. And what we saw very early on in the pandemic was that there was a decline in the willingness or the ability of folks to actually engage in the labor market, but it was much bigger and much more prominent for women. There's a couple of reasons for that. Is one, the closure of schools, like you said, for childcare. Really, that responsibility, for whatever reason, has disproportionately fallen to women who have pulled back from the labor force to manage some households. I think another challenge there has been that when you think about some of the sectors that continue to be those where we continue to see jobs lost or jobs not being regained, those are sectors that have also disproportionately employed women. And so as a result of that, you've seen less ability through just the management of households, or less willingness to be able to hire in those sectors, have both been headwinds for women. Fortunately, I think there's a little, the picture in Colorado is a little bit more optimistic than it is in other parts of the country, where just in the last couple of months, you started to see the labor force participation rate, that willingness to get back out into the labor force has actually picked up a bit. But I don't see it as being something that would equalize the experience between men and women. And really, the prospects for recovery for women in the labor market here and the economy more broadly, I think both are very much tied to the prospects for the vaccine to increase consumer confidence and get folks back out there, to get us comfortable sharing that space again, and really to have consumers out and about and engaging in this vibrant Colorado economy.
I agree with you, Nick. And I have to say, just my opinion, childcare in particular is just one of those issues that fundamentally policymakers, business, community need to come together and figure out some better solutions around, because I believe it's so important to ultimately moving our economy forward and addressing what is, for many families, an ongoing challenge. Nick Sly, Denver Branch Executive of the Federal Reserve Bank of Kansas City. Thanks for joining us.
Ryan, thank you very much.